This week I'd like to do a couple examples of computing federal income tax for 2020. Now, to find federal income tax, well, first, I'm going to assume we are filing as single people. So it's different if you're filing married. But these tax brackets are for single people. And they break down your taxable income into pieces, and they tax that amount of your income at a certain rate. So here, if you earn, say, $10,000, the first $9,875 of it gets taxed at 10%, and then the remaining $125 would fall in this bracket, and that would be taxed at 12%, and so on. The last bracket starts at the $518,401 and goes on no matter how much you earn. But let's look at a couple examples. So, example, compute, and in this computation I'll explain a little more about these. Compute federal income tax on $50,000 in earnings. And again, we're going to assume the year 2020, and we're going to assume that we're filing single. Well, to do that, all we have to do is take this $50,000 and break it into the sub-incomes on which it's taxed 10%, 12%, 22%, and so on. Now notice, $50,000 in earnings is going to break off here. So you're not going to have anything taxed at 24%, 32%, 35%, or 37% because you earn $50,000. Part of that is going to be taxed at 10%, part of that is going to be taxed at 12%, and part of that is going to be taxed at 22%. And well, how can we do this? Well, the first $9,875 is taxed at 10%, so we'll multiply that by 0.1. Plus, well, you earn $50,000, that's above $40,125, so the income you earn between $98.76 and $41.25 is taxed at 12%. So we have $40,125 minus the $98.75, and that's taxed at 12%. Now notice, all $50,000, $50,000 winds up in the third bracket. All $50,000 is not taxed at 22%. The first $98.75 is at 10%. The next, whatever number that is, $30,250, is taxed at 12%. And the remaining $98.75, the remaining $50,000 minus $40,125 is taxed up here at 22%. And this equals, I have these numbers written down, equals $987.50 plus $3,630 plus $21.72.50, and this equals $6,790 of that $50,000 is federal income tax. Now that doesn't take into account state and local tax, which of course varies by state. But notice also here, we just took the $50,000 and went from there. Now, there are deductions you could make on your taxable income. One of them, now I'm not a tax expert. I'm well aware that taxes are very complicated. So we are only looking at some basic examples. Basic examples which should actually cover most, if not all of you, for income you can earn now. I know it covered me for until a couple years ago when I had other things in here. But one deduction you can all make is called the standard deduction. So compute the federal income tax on $50,000 in earnings using the standard deduction. So when you're filing, you can deduct from your income, and you can do what's known as itemizing these deductions. I don't know what that means. Or you can take the standard deduction. I would imagine businesses itemize. But again, I don't know what that means. But the standard deduction in 2020 is $12,400 for people who are filing single. Now, what does that mean? Well, the standard deduction, so I'll just say this means that our $50,000 in income is no longer all taxable. $12,400 of that is non-taxable. So this means the taxable income is $50,000 minus the $12,400 standard deduction in 2020. So that means our taxable income is $37,600. Notice that number would put you in the second bracket. So right now our taxable income is down to $37,600. I don't quote me on this. I'm pretty sure everybody filing single can use that deduction. I don't know the rules. My mom works for H&R Block, so she knows all about this. But so all of my years from like 18 through 25 or 26, I used the standard deduction. And back for some of those years, there was something else called a personal exemption, which was another deduction that any person filing single could use. Tax law changed. I won't get into that. Well, maybe I will. Standard deduction used to be $6,000. Personal exemption used to be $4,800. They moved the personal exemption to zero and doubled the standard deduction. So the deduction went from $10,800 to about $12,000, and then it became $12,400 because of inflation. But where was I? The taxable income, $37,600. So that means part of your income is going to be taxed at 10%. And part of your income is going to be taxed at 12%, because that number winds up in here. So let's find the taxes. Well, again, it's going to be the first $9,875 is taxed at 10%, and the remaining $37,600 minus $9,875 is taxed at 12%. So the total tax burden is $98,750 plus, let's see, I wrote it somewhere, plus $33,27. I wrote 72. $33,27, and that equals $4,314.50 of federal income tax. So that deduction saved you $2,475.50. That's good, I guess. If you're paying taxes, it's nice if you're paying less. So right here, we see that this deduction will cause our taxable income to go down. Because of that, the tax burden also goes down. Let's do one more example. Let's do federal income tax on $1 million. So you're single, you earn $1 million. What is your federal income tax? Well, again, we're going to use the standard deduction. I don't know how to itemize, and I sincerely don't even know what that means. I know it's a word. That's all I know about the word itemize. Now, of course, there are other deductions. What other deductions are there? You could contribute to retirement a certain amount, and that lowers your income tax. That lowers your taxable income. You can use some business expenses to lower your taxable income, and so on. But find a federal income tax for $1 million. Well, our taxable income here is not $1 million. The taxable income is what? Well, it's $1 million minus 12.4. And what's that? That's 9,876. Huh, interesting. 9,876. I have that written down here. I didn't notice it was just 4 numbers in a row. The taxable income is 9,876,000. That puts you in this last bracket. So some of your income is still taxed at 10%. Some is taxed at 12%. Some is taxed at 22%. Some is taxed at 24%. Some is taxed at 32%. Some is taxed at 35%. Some is taxed at 37%. So I'm going to write it on this board because I don't think I'll be able to fit it on down here. So the total federal income tax, state in Pennsylvania on that would be, I think 3% of that, so 9876 times 3, whatever that is. I don't feel like figuring it out. So federal tax on 9,876,000 is, well, again, the first 9875 is taxed at 10%. The next 4125 minus 9875 is taxed at 12%. The next 85,525 minus 4125 is taxed at the next number, which I erased. Where is it? 22%. Quite the jump from 12%. The next 163 minus 85,525 is taxed at 24%. The next 207,350 minus 163,3 is taxed at 32%. The next 518,4 minus 207,350 is taxed at 35%. Not 53 yet. It's taxed at 35%. And then the remaining, not $1 million minus 518,4, the remaining 9,876 minus 518,4. Because we use the deduction, standard deduction. And that's taxed at 37%. So you find these 127 numbers. I found them and I got a federal income tax of $329,839. A lot of money going on. So these tax brackets, it is important to know. Now, sometimes you hear, and I actually believed this at one point until I looked at it. Like if you earn $40,126, you're not paying a larger lump sum in taxes than if you earn $40,125, because the taxable income is broken into these tax brackets. So this is all I'm going to explain about these. This is actually just about all I would be comfortable explaining about it with any competence. There are other deductions that I could explain, but they work the same way as the standard deduction. So if you have income for 2020, for the entire 2020, so you would have to wait, I guess, till after the end of the year, you can see your tax burden, and then you can compare it to what was withheld. And then you can use that to compute a tax return. You would also have to take into account potentially your state and local taxes. I know in mine I have them taken out exactly as they should be taken out. So 3% for my state, 1% for my local.